Welcome to the Corona Correction Series in association with Refinitiv. I'm your host, Roger Hirst. We've just seen the fastest ever 10% decline from an all-time high on the S&P 500. The fall from peak to trough was about 15% in 7 days. Now that sort of volatility can drastically impact investor attitudes. Markets fell, but did we see investors react by pulling serious funds from the market? Earlier I spoke to Refinitiv Lipper fund flow specialist Pat Keon to see where the big flows were taking place and how this compares to previous periods of market stress.
Well, we saw a huge negative impact from the threat of the virus, both in the U.S. equity markets and as well with the fund flow activity for equity ETFs. They had net outflows of roughly $18 billion last week. This was the 5th worst weekly net outflow in history for the asset group. Equity markets in the U.S. had their worst week since the global financial crisis in 2008 last week due to the reaction to the market. The largest outflow came from the SPDR S&P 500 ETFs, which had about $14.5 billion leave its coffers. The other large outflows we saw was the iShares MSCI Emerging Market ETF. This product has over 50% of its assets in China region stocks. They had over $1 billion leave their coffers. And then the next, following up, the third largest net outflow belongs to the iShares MSCI Japan ETF, which, as we know, Japan has been heavily impacted as well. Is it a one-off? I mean, the Fed moved earlier this week, yesterday in fact, cut interest rates 50 basis points to try to stabilize things in the U.S. And I don't think we have any stabilization here yet. So I wouldn't be surprised if we saw some more huge net outflows coming up.
So there you have it. Investors were in no mood to hang around, picking the most liquid ETF, tracking the S&P 500, in order to swiftly pull funds from the market. But it doesn't feel like this was the capitulation that marks a low in sentiment. Volumes on the tech-heavy Nasdaq were high, but actual fund liquidation was relatively low. For a better sign of a tradable bottom, what we really need to see is capitulation across the tech sector, which led the market higher over the previous 12 months. We'll see you tomorrow with another update.